Well, people move to hard assets.
It's just
I hate to break it to folks, but the dollar is not as hard an asset as gold or Bitcoin, but it's relatively speaking, it's the hardest asset in the room with the most liquidity.
Mm-hmm.
So, you know, hate to break it to folks, but sorry, Peter Schiff, but we're not going to $50,000 gold, and the dollar's not going the way of the dodo, and the European Union is going to like collapse.
Yeah.
Like, I'm sorry, you're wrong, and you've been wrong for a long, long time, and that it's right there, it's right in front of you, and everybody like, oh my God, the dollar index is below 100. Like, yeah, well, it's too strong at 114.
Yeah.
And now it's 100, and re-dollarization is happening.
Mm-hmm.
And interestingly enough, at 4.5% Fed funds rate.
Right.
Not at zero.
Right.
Like, I was having a conversation with a patron yesterday about Japan. I made the mistake of using the wrong language to describe what I thought was happening between the US, Japan, and Europe and everything else. And and there was I overstated things on Twitter just a little bit, and he took me to task for it. Fair enough. I had to remind him, hey, by the way, public me is not the same as private me. It's not exactly the same person. I like to be a dick on Twitter on purpose, and I sometimes just dash shit off, that and say things in ways that it's not actually accurate. But we were having this argument about Japan, and it was one of those moments where, look, the story about what's happening with Japan, what's happening with the United States, like they're intricately, they're tied at the hip. Europe doesn't have any cards to play anymore. The Trump administration and the Fed have shut off their access to liquidity. The ECB is now out there complaining that they may not have any in the future. I'm like, yeah. But the here we are, 4.5% interest rates. Everybody thought Japan was already going to implode when this started to move. Like they're finally getting the 40-year bond in Japan somewhere close to the inflation rate.
Right.
Like, and the
was a bad
question, this was the argument started where I overstated things, but then we came to then we made nice, and we talked back and forth to each other and everything else. And we got about halfway through the conversation, and he said, if you really look at it, he said it. He's like, if you look at it, like Bessent, Powell, and Ueda over at the DOJ seem to be threading the needle. They're able to raise interest rates and not destroy their currencies, not destroy their bond markets, not destroy their stock markets. They seem to be threading the needle on this. And it's and to his credit, he's like, and I didn't think they could do it, and this is the guy who educated me about Japan, because I used to have a much different view of Japan than I do now. And I respect his opinion tremendously. He's one of the most valuable members of my community. And, but, once he explained Japan to me in a way that I understood, I'm like, Japan's going to be fine. Fed's going to be fine. He's like, well, I'm not sure I agree with that. I'm okay. We'll play it out. And we did. And he's like, yeah, I think they seem to be pulling it off. I'm like, yeah, they do. And I know a lot of people don't get that because they're seeing the long end of the yield curve rise, and they're seeing, they're seeing the yield curve inversion in the United States. I've got an answer for that one, but there is no yield curve inversion on the Japanese yield curve, by the way. It looks pretty good. It's not increasing in convexity, and it's not. It needs a bulge in the middle. Is the belly of the curve a little lower than it should be? Yeah, okay. But again, there are carry trades that need to be unwound here. There are complicated carry trades between the United States, Europe, and Japan that need to be unwound. Okay? There are, as we move towards a different system where gold and Bitcoin are going to be used to help collateralize the treasury market in both the United States, and then everybody else is moving to that system as well, because central banks are now, 20% of the gold market? like that's where the scramble is, right? And that's what's actually sending gold up in relative terms. The those things need to be unwound. So now let's talk about what's happening in the bond market.